Good morning, traders. It is Monday, the 10th of April, 2017. It's 8:01 a.m. Chicago time, 9:01 Eastern. Hopefully, you had a fantastic weekend. Beautiful weather here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market sentiment is somewhat mixed this morning. Gold is down $6. With the crude leading again, crude is trading at $52.80, up 55 cents or 1%. The major indices here in the US are hovering around flat. Uh, it is the Monday after non-farm payrolls, so it's one of those days where your patience may be tested with the movement. So you just need to take that into account today and know that it's not a very good day to chase anything. Of course, these comments are barring any um, news events throughout the day that could change things very quickly. As far as what's important overnight, we got to keep an eye on the French election that's starting to heat up. And then, other than that, there's really nothing truly major that's going on. The overnight trade has been fairly balanced and mostly sideways with a pretty decent range. And let's see, the Eurozone APR Syntex investor confidence came in at 23.9 versus 21, which was um, uh, slightly better. And then, other than that, the pop in crude is mainly is attributed to an announcement by the Libyan National Oil Company saying that there was force majeure declared on crude leaving one of its key terminals. So there's a supply issue there from Libya. As far as what we're looking for the week, remember it's Monday, so we'll cover what we're expecting for the week here real quick. Today, not much on the calendar other than ECB's Constancio at 11 a.m. Eastern, and of course Fed Speaker Yellen, Fed Chair Yellen speaking at 4 p.m. Eastern at the University of Michigan. That's right at the cash close here in the U.S. As far as the rest of the week, the key figures that are being released tomorrow, we get the German zoo survey, UK PPI, CPI, RPI, Eurozone industrial production, and Fed's Kashkari. On Wednesday, UK ILO unemployment, US import price monthly budget, and the Bank of Canada rate decision on Wednesday. Thursday, German CPI, US PPI core, and University of Michigan. And then Friday, we get retail sales advance, CPI, and business inventories. And that's what's on deck for the week. So the distribution of economic releases is fairly even starting tomorrow throughout the week. So it's expected to be uh, a fairly normal week, so to speak. Let's take a look and see what we had anticipated for today. Oops, I think you're seeing a blank screen. Let me fix that 1 second. All right. Just give me a second here. I'm traveling, so this is not my normal rig. This is very odd. It's not able to share my screen, although it tested out well. Uh, Tested out well over the weekend. Well, that puts a damper on things. Um, Not sure what is up here. Let's see what you guys are seeing. Just give me a second. All right, let's try that again. Capture this screen. There we go. Okay. So you should be seeing the Windows screen, and then now you should be seeing, boom, fixed. Fixed the Ola. Okay, here's what was expected on Friday for a primary hypothesis. I turned on the captions. You can see the closed captions are turned on for the auto-generated captions. They're fairly accurate. But remember on Friday, the driving force here was the non-farm payroll, and the expectation is for, as it says here, the market. Oops. The market is expected to move immediately test lower, um, immediately test lower, and then it's likely to push higher. So I'll walk you through what I said here in terms of what was expected. Um, and it's like expected to push to the upside today, hypo one, and then to sit sideways for the session. And here's what we actually got. This is the overnight, and here's what we got yesterday. So you can see that test lower early on. There it is. Test lower, pushes to the 60 area where it's expected to, pushes through by 3 ticks, and then finishes sideways. Hypo 1 was right on the nose on Friday. So there it is, push lower, and then the big move, the one I put an arrow on here. Let me change the color so you can see what was then and what is now. I put an arrow on it right here, and you can see the big move up and then go sideways. This is typical of a non-farm payrolls Friday. Again, this is what actually happened: a push down, test down early, and then go and have the large move being upwards and then finish sideways. Um, the other hypotheses that were expected was for the market to find strength on the reopen. The market had already taken back the scene of the crime from the non-farm payrolls, and the expectation was for a push to 65. The initial resistance, which comes from right here, this M formation from the Wednesday sell-off, the initial test would be at 65 for a quick bounce back and then closing in the middle of the range. The tertiary hypothesis was for a quick test up into the 56 area, finding sellers rotating down to the low, putting in a lower high, and then continuing lower with an expectation. And as I said here during the video, I'm looking in this situation for a push higher that is fought by sellers. In other words, sellers are hitting the bid on the way up. Then I would look to jump on and look for a short with a continuation move. That was hypo 3. Clearly, that did not work. Hypo 1 was in play. So pretty run-of-the-mill non-farm payrolls release. Where is my overnight? Here's the overnight. Carrying that into today. Um, you could see here that, like I said, we pushed higher on Friday and we finished somewhere in the middle. We finished right up against the point of control on Friday. We closed on the point of control at the 23.52.25, and then we reopened and took a trip higher up to 59, pull back with a lower high right here, and then we get our corrective move down. And right now we are in the pullback of the corrective move, and it's just sitting sideways against the mid. We are against the mid. We are against the point of control. The overnight session, pretty decent range, 9 points, 9.25 points, I believe, or 9.75 points. No, 9.25 points in the overnight session. Volume is okay at 38,000. and overall the market has done a pretty decent job since the Globex open yesterday to test both ends of the range of Friday's range. So this morning the expectation is for it to be fairly a fairly common post non-farm payrolls release. Here's what we've done for the week because it is Monday. We're going to see what have we accomplished last week. What has the market accomplished with its effort last week? How good of a job did it do? What did it try to do? The week before, you can see here we had a week high, which I had announced last week at some point that the week high is likely to be taken out, and the week high was taken out. Um, I believe it was Thursday. The week high was taken out on Thursday, and then we actually finished right here. This asterisk that you see here, here's where the week opened, right there, that little black dot, and the asterisk is where it closed. And you can see the point of control is just above us at 54 and a quarter on the time-based market profile, and it's about 53 on the volume profile, and we are right up against it. We're trading currently in this area. The market's in complete balance. We had a nice push up, and it ended up coming back and hanging out right in the middle of the profile, right in the middle of this balance area into the close of the week. So this is where we are now, expecting a fairly sideways trade. Also, it is spring break here for schools in Chicago. Um, well, I'm not in Chicago right now, but it is spring break for schools in Chicago, so the volume is expected to be a little lighter than normal as folks take off for the holidays. Also, it's a short week. We have Good Friday this Friday, which is also a holiday, so you have to account for that as the market moves towards the end of the week. The trade is expected to slow down and go sideways. I have gone ahead and because of the action we had on Friday was an inside day to Thursday, which was an inside day to Wednesday. I've gone ahead and created a micro composite profile of the 2 days, and you could see a very nicely formed, just a beautiful point of control here, if you can call it such a thing. I know it's a nerd thing to call a profile, a trading profile, beautiful, but it's just a nicely balanced profile at 53, the point of control being 53, the value high being 61 and a quarter, and the value low being 54 of this composite, or the high of it being 61 and a quarter and the low of it being 45. This profile has us trading right in the middle of it. The last print's 23.54. Remember, the point of control is 23.53. Complete balance between Thursday and Friday, and balance leads to what? What does balance lead to? It leads to, it's most likely going to lead to imbalance. I don't expect that to happen today. I expect it to be tomorrow. When we break out of this area today, is expected to be a fairly sideways and balanced trade mostly. So instead of carrying this profile forward some more, I wanted some more detail. And in order to get more detail, I just took the last 2 days of balance and put them on top of each other. Because Thursday was inside of Wednesday, I could have included Wednesday, but I didn't necessarily need to. I can if I want to see what happens when we break out of this 2 day balance. If that's a situation, then I can back up this profile and include Wednesday's profile in it to see what the key areas are, but I'm already seeing that in the profile. We can see that if we break out of the 60, 75, 61 area to the upside out of this balance zone, then the next key area above is going to be 65 right here, the LVN, the low volume node at 64.50. And then immediately above that, 71.50. Those are the key targets above on a break higher. Okay, but for now, just to keep an eye on how this balance is trading, I'm going to keep that profile just as it is. The overall expectation for today, my hypotheses for today, very simple. Let's turn on the flex levels. You can see the key areas on the flex levels here. We actually took out last week's high, or the prior week's high. We closed higher than the prior week. So overall, the weekly trend has changed. We're no longer time framing downwards, one time framing downwards on the weekly and upwards on the daily. The market again, as I mentioned last week late, is in neutral. The expectation this morning is for an extended open auction right up against the point of control. I'm expecting this to attempt to push lower and then looking for it to test the other side of the composite value and then to continue basically in the middle here. The expected range today is supposed to be on the low side, somewhere around 8 or 9 points for the session. So don't have, in my opinion, don't have, oh, what is that? Don't have very high expectations today for hypo 1. Hypo 2 opens again choppy, push up, and then look for a responsive a response in the 50, 57, 50, 58 area. And then I expect it to again traverse the OS and test the other side down to 52. I extended that too far. Down to 52, and then again finishing in the middle. The difference between hypo 1 and hypo 2 is which direction do we take first. That's a nice circle. Um, or an ellipse. And so this is what's expected for today. Now, if balance starts to break, for example, if there's news or something like that, and it starts to break to the downside, then look for a push down into the prior day's low, a small bounce, and then once it breaks through the prior day's low, pullback, and then we're looking for the 38 again, the 38 area to be tested again. That would be hypo 3. Hypo 4, not very likely, but hypo 4 is then looking for a chop, and then whatever breaks us away is likely to test a 61 pullback, 65 pullback, and then 71.50. This is on some amazing, fantastic news, not expected at all, hence the hypo 4, it being hypo 4. I'm not expecting anything to change today. It is Monday, the lowest range day of the week. All right, I'm over my time by a couple minutes. It is Monday though, and this tends to be extended on Monday. Just remember, it is your job to assess risk and wait for the opportunities that give you um, an edge in your own trading plan. Okay, don't feel bored. Don't trade just because you're bored. We don't do things just because we're bored in trading. It just costs us money. I can almost guarantee that outcome. The second thing I wanted to remind you of, April 19th, I'm doing a public AMA. They don't happen often these days. A public AMA with Futures IO on April 19th at 4:30 Eastern. If you have questions or if you want to be a part of the discussion, it's about an hour long. Make sure you join that. The invitation for that is in the description of this stream on YouTube, and it's also on my Twitter feed, twitter.com/futurestrader71. It's also on my website, futurestrader71.com. Good luck, and I'll catch you tomorrow. Take care.